Well, good morning, everyone. It's a beautiful Thursday morning, December 2nd, 2021. We get together with our distribution partners most weekday mornings at this time, just a minute or so before 8 o'clock Central, to go through tactics, strategies, success stories, and other updates. We planned a primary topic today, and it's actually what I emailed out to each of you on the agenda. And it's viewed here on my screen, so we'll go through that momentarily. But I've received numerous, I don't want to say concerns, but inquiries from many of you that have heard some rumors that are obviously serious, and so we need to address that before we get started. So I was approached, and as of yesterday, I did file the application to run for Wood County judge. So I will be running as the Republican candidate for the judge, and that election, of course, will be next November. So I don't anticipate it having any change on our business relationship or operations. It'll affect, obviously, schedules some. As the judge, I'll be acting as the judge of the small claims court here in this geographic area. I'll be issuing a variety of process and writs in situations where I have jurisdiction. I'll be holding court for different types of offenses, assisting in evidence proceedings, examining witnesses and such. But anyway, I know that some of you had gotten wind of that, but I don't want you to feel that that changes our relationship and our model. Of course, there's a difference between filing an application to run for public office versus being elected. And we've got some time before all of that comes through. There is an incumbent judge, but there's a lot of concerns about the person that holds that office now. So I was approached about considering this, and with a lot of prayer and thought, I did file for my application yesterday afternoon. Okay, so with that being said, let's go ahead and dig into our topic today. So this week we've been talking about MyRealEstateMoney.com, and Monday, Tuesday, and Wednesday we rolled out the 3-part training. If you missed any of those, there's links to all of those on MyRealEstateMoney.com. So that's fine. Now we're going to move it up a little bit to an advanced topic that may or may not interest you, but I do at least encourage you to hear me out, because we have proven this concept without a doubt. Now we're looking to replicate it. So our topic today is advanced training on how to earn money by owning a commercial office building. So let's go through the background. So in the summer of 2021, this year, just a few months ago, we purchased a commercial building. I'm sitting in it right now, using the My Real Estate Money platform with 100% financing. And it worked as we talk about. Not even a credit check involved, no personal credit check involved. And then also mid-year, we launched the Cheap Business Address program, and many of you are aware of it, and the URL is cheapbusinessaddress.com. And the reason for that is we wanted to provide a solution to a problem. A lot of small businesses do not have a true commercial address. They're either operating from their home address, a post office box, or worse yet, they're paying for some virtual office through Regis or what have you. That is a commercial address, but it's not distinctive to them. It's a shared address, which does not give the credibility needed. Why would that matter? Well, you know that as technical advisors, what you and I do is we help small businesses build their credibility, build their fundability, so they have access to capital. There's no magic. There's no smoke and mirrors, right? If you meet the credibility and underwriting criteria, you get approved for money. The more credible, the more fundable you are, the more money you can get at the better rates. Well, it certainly shows well to lenders and creditors in general if your business has its own address. So our approach was to buy a building to prove the concept, and then start offering unique business addresses, not shared addresses, unique suite numbers, to be able to help small businesses increase their access to capital. And so while it helps pretty much in all circumstances, it's especially true if what the small business is trying to do is build business credit. And you and I know business credit is based upon the EIN of the business. So where you're applying for credit under the business's EIN, often without a personal guarantee, without the use of a social security number backing it up. So with that being said, we rolled that out mid-year, and almost immediately we enrolled enough clients to cover the full cost of the mortgage, insurance, and utility. It's like, wow, this is pretty novel. So we can go buy a building with 100% financing. We can offer this solution out that's badly needed by small businesses, and enough of them will enroll that now we don't even have to pay the mortgage, the insurance, utilities. There's enough money coming in from these virtual clients to cover the whole nut. Plus, we hired a property manager. I mean, she didn't make a whole lot, $1,000 a week, but it covers her costs too. So the way that we structured it is the clients that want the unique commercial address, they pay a very nominal rate, under $100 a month. So that's within the budget of most small businesses. Now, we do have a 10-year lease. You might say, well, why is it a 10-year lease? That seems really long. Well, what you and I know is that for the SBA and most commercial lenders, they want to see that the borrower, in your case, in my case, the client, but the borrower to them, has a lease that matches the term of the loan. And that's a barrier. I've seen a lot of small businesses not get approved for SBA loans just simply because they couldn't come up with a lease that matched the same term. Now you might say, well, why does that matter? And it's a little bit off track, but it's just good tangent information for you to understand. So let's say that you went and borrowed $100,000 from the SBA for a working capital loan. So we're not talking about buying real estate. That's separate, but we're talking about a working capital loan. What the SBA, what the lender is going to want is first right of access to that business's property if the borrower, the business, does not continue to pay the loan back. So in other words, they need somewhere to go be able to take possession of whatever physical assets that the business, the borrower, has to put towards any unpaid debt. Well, if you have a home office, that doesn't work, right? Because legally they can't come to your home, put a padlock on your home, and take your refrigerator and microwave. So that doesn't work. Well, post office boxes don't work because those really aren't even offices. That's just an address. And shared virtual offices don't work because it's not really a unique space that's yours or the borrower's. It's instead just sharing of an address. So a unique address that matches the term of the loan is often what's needed. A lot of people don't realize that. So that's why we do a 10-year lease. So the bottom line is, each client that enrolls in the cheap business address, essentially we can book an accounts receivable of just almost right at $12,000. Now it takes a few of those to cover the monthly mortgage payment, but it doesn't take many, just depends upon how expensive your mortgage is. So that's the background. And that doesn't do a real good job of describing what's in it for you. That's what we're going to go to now. So what's in it for you? Well, we are seeking to develop a national network of virtual offices. And so instead of us having just one physical address in one zip code, 75773, under cheap business address, we're ready to build out a national network. And this is something that you may or may not want to plug into. The way that works is that we have a proven concept, as I've described above. And so we're seeking to develop partnerships with entrepreneurs wanting to purchase a commercial building in their community. Obviously they can use the 100% financing and then use the model that we have so the costs are covered. And so the end result is you get a free office building. I already have a question here from Damon Taylor. So Damon, good question. Damon's asking, is the financing through the SBA for the office building? Well, it could be, Damon, or it may not be. And why I say that is the SBA is really not the lender, Damon. The SBA is the guarantor. And so while the SBA 504 loans do apply to commercial office buildings, there are some other requirements, one of which is, Damon, that it has to be at least 51% owner occupied. So what we'd have to do, Damon, in your business plan is say, okay, how big is the building that you're wanting to buy? Let's just use simple math and say it's 10,000 square feet. Well, how much of that, Damon, is your business going to use? And when I say your business, I'm talking about the borrower that's applying for the SBA loan. Well, if the building is 10,000 square feet, Damon, and you're going to use at least 5,100, then yes, then that could be potentially eligible for an SBA 504 loan. If instead, let's say that you're going to use a smaller portion of that, 51% or less, then the SBA would not be a good option. But that's okay. You and I aren't going to get real worried about which lending source at the outset that the building's going to be financed by. So don't be distracted with that. But what we are doing is wanting to build out a strong national network. And you see other, and I'll call them competitors. I don't feel that they're really a competitor to what you and I are doing, but you have WeWork. WeWork's gotten a lot of attention, right? It became valued at billions of dollars, and then it took a big dive, and then recently it had an IPO. And so they have more of virtual offices that you can use shared office space and go in. That requires a lot more overhead, more staffing, more expense. So that's not our space. Our goal is to develop commercial addresses, legitimately, incredibly, across the country, but it's not a physical space where the person goes and works. So that makes it different than a WeWork or a Regus. It also tends to make it cheaper for the client and provides them a better value. Okay, because we know that most people would just prefer to work from home probably anyway. All right, so, and then of course, what we can do is we can, and we'll get to this point in a moment, as they become a tenant of your commercial office building under the program, then as their business grows, they might very well grow out of that space and actually go buy their own building, and you could facilitate that through the MyRealEstateMoney. You get paid your 10 points or whatever you're charging. So it's not meant to confine the client. It's not meant to say that you couldn't let them out of their lease sooner if you chose to. But in general, the lease term needs to match the term of the loan. Okay, so we covered we're looking for one partner per zip code. And I realize that's not exactly a perfect model because some zip codes are much more dense and populated than others. And there's many, many zip codes across the country. But what we want to do is take this proven model that we discussed up here and then replicate it by developing a national network and offering the opportunity for you to be our partner in this. And so by doing that, you could control one or more zip codes, have one or more commercial buildings. We can use the 100% financing to acquire the buildings and then generate positive cash flow for you. So essentially it's a free building. Okay, so what's in it for you? Let's break it down. Well, I guess that's what we were covering. So get you a commercial building with 100% financing. You could use part of the building for your own purposes or not. That's really secondary, but it's an asset that is wealth building, right? Because real estate tends to grow. By using this model, we can cover 100% of the cost of ownership by joining our network of cheap business address virtual offices and then providing addresses to entrepreneurs, no different than what we described here. Same exact model that's working well. It creates positive cash flow for you, as I mentioned, while building equity through ownership of real estate. And I see a question here. George is asking, can he partner with us with one building or multiple buildings in different zip codes? And that's right, George, you as many as you want. But back to track here. So what's in it for you? Obviously, you or whomever you designate could be appointed as the commercial property manager. And then that is, of course, a salary in itself paid for by your clientele. So this concept, what we're seeing here is the concept covers the cost of your salary and should cover the complete cost of the building. And then also, of course, many of these clients that are using your cheap business address, quote unquote, will be great prospects for other offerings that you may have. And so some will need working capital, which we commonly think of our access to capital program. Some may want to actually obtain their own building, and whether they want to be part of our network or not, but just their own building, whether it be an automobile repair shop, a bakery, or what have you. Some of the clients will have credit issues, and so you might be able to help them with the credit suite. And then, of course, many of you are licensed as life insurance agents. And you and I both know that most people do not have adequate asset protection. And so that would be an opportunity for you to have a relevant relationship with them, do a financial needs analysis, and see how you can help them with that. Okay, so I see a few hands going up. If you have any questions, just go ahead and type it into the Q&A, the question and answer in Zoom, and we'll get to that. All right, so let's see how to get started, and we'll get to your questions. So it's real simple. If you're interested in owning a building and working with us in this capacity, let us know. There's a little inquiry form on the referral partner page, and that's been there. It's not new, and in the message you can let us know. We do charge a one-time application fee to get you plugged into the national network. We're going to then enroll you in the access to capital program so we can get the financing for the building. And then once you close on the building, then we can implement, right? Then we can add you to our national network or virtual offices and turn that income stream on. And I knew the question would be asked, so I went ahead and put that down. You'll keep 100% of the income generated from your commercial address. So it's not a 50-50 split. It's not a 90-10 split. You would keep 100% of the client payments. I guess we can't, and this isn't a franchise or anything like that. So I guess we can't control it, but the intent is to have standardization. And so what we would like you to consider is going with this price point. We feel like this is a very attractive price point for clients. I can highlight it at $99 a month. So David's asking, and others of you asking, well, what's my break even? Well, we're going to have to create a budget based upon the type of building you want to get. If you want to go buy Trump Tower, we're going to have a whole lot of clients that are using your cheap business address. So keep in mind that it doesn't have to be some glamorous building or property, because it's the clients aren't coming to your property. The clients are piggybacking off of that address, and you're giving them a unique commercial address, but it can be a quite humble building. So keeping your overhead low would be wise. For us, we pay, I think this is correct, $1,215. I'm pulling from memory, but I think that's right. That's what our monthly mortgage is. So from that alone, you can say, well, okay, we need about 12 clients enrolled to cover the mortgage. Now there's other expenses, right? You have to have insurance and utilities, and if you're going to cover your salary, so that adds to it. But for the building itself, David, as long as you keep your overhead down, the break even's fairly low. David's question was more specific. Is there a guarantee that he'll have enough tenants to cover the overhead? And the answer to that is no. I mean, it's easy to do, obviously, and I'm showing you the model that works, but you or someone on your team is a commercial property manager. Now we have the website and the marketing prowess, and there's certainly a need. And so it should be profitable within the first 30 days. But I don't want to send a message out, David, that you could do this, do nothing, and all of a sudden it's a money-making opportunity. We need to bring on the clients that offset the cost. Thank you for that question, David. All right, so Winston asked about resident agent services. And so the model that we have does not include providing resident agent services nor providing any legal services. So, but I guess if there's add-ons that you wanted to make available above and beyond this core, you certainly could. And then the clients that use your space, that lease from you, if they're already a formed entity, they could choose to change their official address to the address that they're getting through you. But a lot of times you're going to be attracting early stage businesses that don't even may not have even formed an entity yet, and they could form the entity using the address they get from you. Good questions. Let's see here. Thank you, Damon. Ben asked, what's the maximum number of tenants allowed per commercial building? Well, typically it's just based upon the number of suites that you have, that you set up. And so in general, there is no maximum, because you have control, Ben, on how large each suite is, because again, people aren't physically coming to that suite to work in, so the suites could be quite small, but in general there is no maximum. David has a follow-up question on parameters or guidelines on type of facility. No, I mean, we didn't buy it, but there was a car wash literally down the street that was for sale for $40,000. And the gentleman that operated the car wash was not the property owner, and he was getting ready to retire. And the property owner was actually in Florida. And so I contacted him, and he was willing to sell it outright for $40,000. I mean, so you could certainly find very affordable property, because again, it's not a retail establishment. Clients are not coming to your building. Now, if you're going to work out of it, it needs to be suitable for your needs. And I know when we bought this building, we had to do some capital improvement we had to put a new heating and cooling system in. We actually negotiated that from the seller. So we did add a new heating and cooling system, but that was a seller concession. But, added new windows, doors, and things just to upgrade the facility. But the short answer, David, is no, there's no parameters or guidelines on the type of facility, other than the fact that it needs to be a true commercial address. And if you go buy a house and you start offering commercial addresses with a residential building, that's a mismatch. So I guess the only parameter is it needs to be a commercial address. Thank you, David, for that follow-up. Let's see. Augustus asked, any type of advertising in the budget to fill the offices? And so typically the advertising that you would use wouldn't be physical, because you're not trying to draw foot traffic in to the building. Instead, what you're doing, certainly, and we can help you with that, we have that all turnkey, is to be able to offer it online for businesses looking for a credible commercial address for the benefits we talked about. But we can help you with that, and it's it doesn't require any big budget by any means. Okay, Mr. Jackson asked, what is the likelihood that the property will be purchased by us? Well, I don't exactly understand, but what I understand that what I interpret your question is, this is prefaced off the fact that you're purchasing a commercial building using our platform. And maybe what Mr. Jackson's asking, could he not purchase a building and still do this? And the answer, unfortunately, is no. We wouldn't feel comfortable adding a leased space to our national network. We would want it to be owned by you. And the reason being is if you just leased it, what happened if your lease got canceled? Now you got a bunch of clients that have virtual offices with you, and you no longer have right to that address. So it would need to be owned by you. Hopefully I understood that. All right, Alan has a building in mind. The building is mixed use with 3 apartments and an office space. Yeah, so that's fine. It's fine for it to be mixed use. Just needs to be zoned commercial again. So the fact that there's some apartments as part of that commercial address, that's not a problem. And he's asking about funding for rehab. And the answer is yes. If you go back and review the training on MyRealEstateMoney, you'll see that both the acquisition of the property as well as rehab costs can be borrowed. So yes, that is not a problem. And I just told you, Alan, that we had to do, I wouldn't say some rehab, but some updating to our building. Andre's asking back about my decision to file to run for judge, and her question specifically was, who's going to hold our morning seminars? Well, the election is every 4 years, and so the term wouldn't start until November of next year of 2022, sorry. And so worst case scenario, we just have to adjust the time a little bit for our Zoom trainings. That's not a concern. All right, so who else has any questions? Georges, I see your hand up, but you've not typed your question into the Q&A. Who else has questions, comments, concerns? David asked, on 100% real estate program, are the reserves included? Yes, sir. Damon's got a follow-up question. How does he get started? Well, Damon, good question. So let's go back to what we covered. What we need to do is find out from you, Damon, officially that you're interested. So just submit on the referral partner here. But Damon, in the message, be sure to put the zip code that you wish to acquire a property in that would then be plugged in to the network. Because again, we're limiting one partner per zip code. And so it doesn't mean that you already have a building there. It doesn't mean that you even have a building in mind, but we need to start partitioning off where we have partners and where we don't. And so we need to hold that zip code for you. And frankly, then if the property that you end up buying is in a different zip code, we can always flip that out, but we need to start planning here. LJ has a really good question. He says, hey, I'm already in the capital ready. How do you get involved? Well, so that's fine. So you would start the same way. We still need, LJ, for you to let us know that you're interested, and we still need to know the zip code. And so you're going to put that in the message on the form. And then we need to proceed with making sure that your loan package is built specific to this use. And so that sometimes confuses people. To me, it's crystal clear, but to some people it's confusing. So if our goal, we'll just use LJ as an example. So LJ, if your goal is with your enrollment and access to capital to be able to buy a commercial building, then the loan package needs to be built around that, right? So the business plan needs to be specific to that. Our financial projections need to be specific to that, and so forth. And so that's fine. And maybe you had something different in mind when you first enrolled in access to capital. That's okay too, but we need to get the loan package consistent with whatever you're wanting to do. Maybe it's not this. Maybe you want to go open a ghost kitchen. Ghost kitchens are a big deal right now. That's fine. So if you're already enrolled, we need to build the loan package to match this. And if you're not enrolled, then of course we just simply go through these steps down here. Hopefully that makes sense. So I guess ultimately what I'm saying, LJ, is it's fine to switch what your intended use of capital is. We just need to get everything matched to where you're going now. Reverend Jeremy asked, are we going to send this agenda out? We sent the agenda out this morning to everyone, encouraging you to attend, so you should already have it. Alan asked, to get the funding, do we need to have the property under contract before proceeding? Well, we need to build the loan package first. The loan package should be built around the anticipated property purchase, and then we'll proceed with purchasing that property. If for some reason that property doesn't go through, then we can make slight edits to the loan package for the next best property that you're considering. So not a problem, Alan. Just let me know if you have questions. All right. So Damon says he's really excited about this. He's having trouble understanding it. So let me go back, Damon, and cover it one more time for you. So what we know is our primary goal together is to help provide access to capital. We do that by building financial literacy and building loan packages. Now, some of you as distribution partners are interested in generating income in addition to accessing capital, and you don't even have to be a client to be a distribution partner. So Damon, what we're saying is, if this model makes sense to you, if this model is attractive to you, then we could collaborate on this, add you to our national network of virtual offices under the cheap business address concept, whereby we can purchase the real estate with 100% financing, generate revenue, enough revenue for your building through this model that covers the cost of the mortgage, Damon, the cost of the insurance, the cost of the utilities, and frankly, even a salary for yourself if you need. Plus, then those clients obviously can become your part of your pipeline for other resources or services that you offer. So hopefully that helps, Damon. Thank you for seeking clarification. Okay, so Mr. Jackson asks, I want to know if my information or your information will be used to get the loan to buy the building. That's a great point. So we bought our building, you would buy your building, and the building would be owned by you or whatever business entity that you want it to be in ownership of. So we would not, and I think Mr. Jackson's asking a good point. It almost sounds too good to be true, but just to clarify, we wouldn't be partial owners of your building. You own your building 100%. We don't get part of the monthly income generated from your commercial address clients. You keep 100% of that. But yeah, it's your building and your financing that gets the building. All right, thank you, Damon, for your comments. Zahn clarifies this automatically strengthens the credibility of the company. I agree. And so Damon's inquisitive this morning, so let's go back to Damon. So Damon's vision, I think, is a little grander. I think where he's having trouble reconcile isn't he's thinking, instead of just using a commercial building as described here, I think he's considering using it for more. So, maybe he's almost setting it up as an incubator where he's offering professional services and having workshops and all of that. And so you're right, Damon, if you're going to have foot traffic into your building, then that's going to change. It still works for this, but it's going to be a higher hurdle to jump, right? Because now you're going to have maybe a more presentable building. The location becomes more important, the finish out. So it's okay, Damon, if you want to shoot big, but this model is, we call it cheap business address because it meets the criteria. It is a cheap commercial address. It's a unique address for the client, but it's not meant to say that it's walking into Taj Mahal, because it doesn't need to be, because the criteria you're trying to help the client meet is, do they have a unique commercial address? That is a low bar to meet. But if you're wanting something fancy, some grade A office space with a with a cafeteria on the first floor and chef prepared meals, I mean, that's fine, but that's a much more aggressive implementation than probably what most of us will want to do. And frankly, it's not necessary for this model. That may be important, Damon, for what you're wanting to accomplish, but for this model, frankly, we could have bought that $40,000 car wash with a commercial address and it would have worked just fine. And again, no, we didn't buy it, but we could have. Okay, let's see. Augustus asked, boy, it's a weird question you're asking. Will there be small offices per client on the build out? I don't understand what you mean, Augustus. I'm sorry, I can't interpret that. If you want to re-ask. Okay, so anyone else have any questions on what we've covered today? Again, this is not meant to distract you from your core business and your core focus. I'm letting you know that we've got a proven model that we've built out, that we validated, that works. And it came to mind because rent is due the first of the month. So yesterday on December 1st, we ran the ACHs for all the tenants that we have. And then of course it deposits at the end of the same day, the same day you run the ACH. So what happens is it's a good model. It may not be the fit for you. Okay, Renee says she's interested. So again, Renee, here are the steps we're going to go through. So yeah, you're welcome to call us, but here are the steps, Renee. But yes, we'd love, but the key is we've got to start allocating the zip codes. I got a feeling Damon's probably going to do 2 or 3 buildings, 2 or 3 zip codes. I don't know about the rest of you, but we just need to start allocating the zip codes. And so it starts with just letting us know if you're interested. This didn't commit you to anything, but let us know the zip code or zip codes you plan on buying buildings. Let's see here. Lee asked, the process from beginning to end took us right about 60 days to buy our current property. So, I think that's pretty normal, 60 to 90 days. Because of the lender model we have, there was not an appraisal needed. So that certainly saved time and money. So no appraisal was needed. We did need to go through the title company and get all that information perfected. And frankly, there's a couple items I don't really understand that the seller had to clear up so the title company would progress with it. I think the seller was married. Well, I guess he past tense was married. His wife passed away. And I think that because of his wife being deceased, it required some extra documentation, but normally 60 to 90 days is a pretty straight, a pretty good time frame. All right. Well, I think we've got it covered. So again, if you're interested in partnering with us on this, you're welcome to do so. No obligation to do it, but it's an interesting approach to being able to build your wealth by acquiring one or more commercial properties using 100% real estate financing, and then having the mortgage and business related expenses paid for, potentially even your salary, by using the cheap business address network concept. All right, well, thanks everyone. We'll see you back tomorrow morning. Thank you, Damon. I'll give you a call. Bye-bye.